You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Hello, Shelby. How are you?
Doing good, Dan. Kicking off our grain market conversation with what are futures looking like?
Still maintaining a low pattern, reflecting in this time period the general idea that if there are threats to the market that would come out of South America in particular, particularly in Brazil, for both the second crop corn and for the soybean crop, that they're down the road. There's some moisture that's come up front now during this time frame. So really, it's a horse race, I guess, between the damage that was caused earlier and the question of whether late moisture can overcome the early damage. And so I think the way our markets are functioning, they're really not been paying much attention to CONAB and some other forecasts from in country. They must be waiting for verification coming from the USDA in the next February World Ag Board WASDE report. So we shall see where all that goes. And I think that we're down towards for corn. We're down at historic lows here. If you look at where we closed on yesterday, 451 for prices. Some cash bids in the area. Cash bids are all hanging around again 450, 475. So we have some pretty decent basis levels. It's almost as if the cash market is loath to go where the futures have already gone, and are showing that a little more reticence, I guess, to going lower just by the strength of their basis bids. And the should add that for soybeans here we're at 1223, closed down some 17 plus cents yesterday. Cash bids just really vary across the state, and that's been this ongoing pattern that you and I have been watching, that if the export oriented places, say Topeka, in particular, a 35-cent under basis, and for soybeans, you go out to Colby and Garden City, you're 95 cents to $1.10 and these would be the best bids for the elevators in those localized regions. And others are kind of in the way. You have a kind of in the middle, the Hutchinson bid at 10 under. You have a Salina bid, surprisingly at 50 under. I say surprisingly because a lot of times the Salina bid will be sort of in line at that export market with where Topeka and Hutchinson are. It's again export oriented, and frankly and Columbus Southeast also doing decent. The wheat market has closed yesterday actually up 11 cents, 637, and the cash bids, a lot of variation around the state. Again, on the low side, you've got 562, 582, 586 in Colby, Garden City, Columbus, but then you're above $6 at it's 612 in Topeka, 616 Hutchinson, 617 in Salina. All the new crop bids are the new crop bids in the eastern 2/3 of the state kind of hovering between 580 and 603, 577 in southeast, 573 in the Colby region, 583 in Garden City. So I guess I'd say that there's no sugarcoating that these aren't the prices we'd seen this summer. A continuation of generally lower trends at this time. The market has a general narrative that it's following until it gets other information of holding steady in low area at these low areas, and that's kind of where we stand. I would say when you look at the seasonal patterns, late January into February can often be for some of these key grain markets a pretty docile time in the market, and I think personally I'm thinking that there's a growing possibility that adjustments will come in the low to the lower side in the February WASDE report, and that's I guess that's the question of the hour right now for anybody holding these crops unsold. Will we get confirmation on what we seem to see as significant crop damage down there, and will that give people a return to storage? So far, they've been holding steadily, but if that strength doesn't come and we move into February and March, then it has pretty significant negative financial repercussions for Kansas farmers.
And thinking maybe a little bit past Kansas, Dan, you recently went on a trip to North Dakota, and so kind of what were some concerns up there that might also be something that Kansas producers want to think about?
They're concerned about the wheat markets just as we are, although the hard red wheat export market has shown more weakness than the hard red spring market. It's really interesting to see where the futures spec trader positions are, and again, most cash market folks aren't paying that much attention to that. But when you look at but I think if we're trying to get an understanding what the market is thinking, you look at whether those that make money based on just movement, again, the managed money or the speculative folks, are they selling? Do they have large selling positions, or they have large buying positions? If anything, proportionally, the hard red spring short position is well, it's either impressive or depressive, depending on how you're looking at that. Even more negative than the hard red winter position, and that was of concern to them. Thought provoking for in North Dakota, most farmers, if they have wheat, they're storing it on farm in their own bins. We have the pattern in Kansas to where we'll move our wheat, and the elevators will typically store that. In fact, shortfall in wheat quantity is a real negative, harmful situation that's developed for Kansas elevators. Again, we need the quantity of bushels for storage and potential storage profits. So that was an issue up there. They're all that much closer to bioenergy related issues. They have a lot of entrepreneurial growth in soybean processing and going into renewable diesel. They up there are looking at canola production coming out of Canada. I know we have the potential Western Kansas to crush and grow canola as well. So that's something that's coming for us. But they're looking at that and seeing the potential growth in that sector as one of their bright spots. For corn, they do wonder about the prospects in the corn market. I guess just like we do. And if you asked a group of Kansas farmers, and I know that this week we have a commodity groups meeting, I think in Salina, they'll be wondering about corn versus soybean acres. That we did have a report came out. Now this was an independent, I think it's from Farm Futures, I think we can name that. It's non-proprietary, but it was a survey of like 858 farmers, so not as big by any stretch as a USDA survey, but came out and basically talked about a little bit about a 1 or 2 million acres less change this year in corn acres, or several million acre more increase in soybean acres. Hard red spring acres whereas they plant in the U.S. It was other spring wheats, how they tied that as hard red spring and some spring white wheat. Last year, 11.3 million acres. That survey came in and said 9. So that brought, when that information came out to this group of crop insurance folks, who make their living off of selling insurance for acreage, that brought a quote pall to the crowd. So so they sit in a situation just like we do, and they're worried about where their acreage will go and how their markets will respond. They do set closer to the Pacific Northwest. and rail sales to Asia are more of a possibility at lower cost to get to Vancouver, and if it's in Canada, or Portland if it's in the US. Yeah, well, yeah, Portland would be the main place that we'd be going. They wonder about the quantity of sales overseas, and so I guess they're, I wouldn't say they're appalled by the low rates of hard red spring wheat sales heading that direction, but they were in I guess incredulous, just as we are, of the extremely low path for hard red winter wheat export sales, which is, that's big issue in these markets. So you asked me what's going on up there. Just the same as here, people wondering about where their markets are going, and what the prospects are for the coming year, and hoping that the cash prices will be at levels that allow for profitability on farm enterprises, and for the crop insurance industry, will lead them to good sales. So,
And as we bring our conversation back to Kansas, then what are we seeing for ethanol?
we're seeing ethanol profitability 2 weeks ago had dropped, at least by my own calculations, had dropped into the negative area. We had been making, I think, for the month of December, about 7 cents a gallon, and that's down from 30 and 60 in previous months. Had dropped the first couple weeks in January down to a 7-cent loss, and it was thought-provoking to me anyway to see that the late reports of the latest weekly ethanol production number having dropped significantly down to, I think, 850 some million gallons, and that being below 950 is considerably more. So the ethanol industry generally showing some sign of slowdown. The cash prices in Kansas ethanol plants as of January the 25th, yesterday, ranged for corn from 470 and a quarter to 497 and a quarter, average 483, and that really continues to stand out as the high average bid in the U.S. Illinois bids about 450, as is Indiana, about 460, 456 in Iowa. So the Kansas bids higher than Iowa, Nebraska just to the north of us, 460. So I'm not sure exactly why that is. That we're doing better, other than we do have a logistical advantage in the ethanol that we grow, in terms of moving it to the West Coast markets, and we have a lot of competition for corn with feedlots and such. So both those factors probably help to boost our ethanol cash price. But so you see that, say, a price of 483 for corn in Kansas, and look at and compare that to the elevator bids. The highest elevator bid 472 in Garden City, as you were talking about earlier. So at this point, still a demand center for ethanol, some profitability there, and we'll see where that goes.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.